Hi, I'm Larry Gaines. I've been a professional trader for over 30 years, and I've taught thousands of traders my own directional trading process that I designed for trading any type of market environment. In this video, I'll share a big part of this directional trading process that uses multiple moving average indicators to identify price trend, measure price momentum, and to define key areas of support and resistance. These moving average indicators can be used for trading any type of market and any time frame as well. A moving average is a widely used indicator in technical analysis that helps to smooth out price action by filtering out the noise from random short-term price fluctuations. So it's a trend following type of indicator or lagging indicator because it's based on past price. Now, the two basic and commonly used moving averages are the simple moving average, which is a simple average of the security over a defined number of time periods, and then you've got the exponential moving average, which is giving a greater weight to more recent prices. So it's a faster type of moving average. And the most common application of moving averages are to identify trend direction, determine support resistance levels, and then to measure price momentum. Now, key moving averages are widely followed by investors and traders, with price breaks above or below moving averages used as trading signals. So moving averages on their own can be an excellent trading signal when two averages cross. Now, a rising moving average indicates that the security is in an uptrend, while a declining moving average indicates that it's in a downtrend. And an upward price momentum is confirmed with a bullish crossover, which occurs when a short-term moving average crosses above a longer-term moving average, and a downward price momentum is confirmed with a bearish crossover, which is occurring when you have a short-term moving average crossing below a longer-term moving average. Now, I'll also refer to moving averages as automated trend lines because they track trend. So let's take a look at the key moving averages that I like to follow. So these are key moving averages for daily, weekly, monthly. So I like to know where the 5 exponential moving averages, that's your faster moving average, the 13-period exponential, the 8-period exponential, and the 21-period exponential. And then I like to look at the simple moving average, which is a slower moving average. I like to always know where that 50 simple moving average is, the 100-period, the 150, and the 200-period moving average. So the really key moving averages that most market participants and traders and investors will follow will be that 50 simple moving average and the 200 simple moving average. So that's the period of time frame. So when you combine these different moving averages, they give you a great trend tracking type of indicator and can also be a great indicator for signaling price changes and trend reversals. So let's take a look at some examples. Now, this moving average combination is what I've found to be the best for macro trend reversals. So this green dotted or kind of squares here, this is a 5-period exponential moving average, and then the white is a 13-period exponential moving average. So these are fast moving averages. But I've done a lot of research, and for my trading, when I want to look at a macro trend using the monthly time frame, I'll go to this kind of combination. So this is the S&P 500 future. So if you remember back in 2000, we had Y2K, and then the markets after 2000, just really took a nosedive down. So when you look at this indicator here, so here's the 5-period exponential moving average. So this would be 5 months of data, and here it is crossing the 13-period right here. So look, when it had that cross, look at the momentum of this market. It shifted to a downside trend, and it just got stronger and stronger and stronger to the downside. And then you had, here's the red is a 8-period exponential moving average crossing the yellow. So then you had additional momentum shifting to the downside. So that's a massive macro trend down. That was on the S&P, and it really nailed it perfectly. Now, to look at the macro trend reversal to the upside back in 2000, that came here in 2003, and right here was your crossover. Here's your 5-period crossing the 13-period on a monthly, which I refer to as macro, and that came about July of 2003, and then we had a steady nice trend back to the upside. We had the 8 crossing the 21, and that just accelerated. So really perfect system for macro trend reversals up or down. So here's one more example back, remember 2007, 2008. Let's take a look at that. So here you can see price pushing up really nice through 2007 on the S&P, and then right here started topping out right here in October of 2007, November, and then look in 2008, January 2008, you had the 5-period exponential crossing the 13, right in here. That was January 2008, and then the market just never recovered. Then you had additional momentum when you had the 8 exponential crossing that yellow line, which is the 21, market collapse, and then the macro reversal back to the upside started happening right here back in October of 2009, and then started trending back up. Now if you follow the chart here on the S&P and you just look at it going forward from 2009 when we had that reversal cross here, the 5 never really crossed back below the 13 period moving average. And you can see right here we had one occasion right here, July of 2010, where they came down and flattened and touched, but the 8 never crossed and had a close below the 21, which is that yellow dash, and then it continued up. It just trended up. Now the only time we had a test of that again was back in 2016 right here. So you had the 5 period crossing the 13 for a brief moment, but we never got confirmation. If you look here with the 8 exponential, that red dash, it never crossed the 21. So the market was just been in a massive uptrend on a macro basis since 2009, and here we are currently. We came down, you can see here we came very close to a crossover back in December of 2018, but never did cross. So we never got that long-term macro cross, and we're still right there. So another really good time frame to follow is to also use the weekly time frame for this type of analysis. So looking at these moving average crosses again on the S&P and using the weekly time frame, you can see this chart here is on a weekly right here, S&P weekly right there. So back here in 2018, you can see right here we had a move down based on a moving average cross here on the weekly. So we had the 5 period cross in the 13 period right here, and markets broke from about 2,700 to a low of 2,550, then rebounded, and then you can see it cross back up here back in May of 2018. And we had a nice trend back up, peaked out. This was October 2018, had the moving average cross here, the 5 crossing the 13 on a weekly, and then you can see here accelerated when that 8 crossed the 21, and we had that big massive sell-off here. Then we had the correction back up where we got that January 2019 and had the big move back up. Now we just got a correction or a follow through a trend on the 5 crossing the 13 right here, and but we haven't had confirmation with the 8 and 21, so it could go either way. But it's a great way to track trend and look for reversals in the marketplace. And here's breaking it down on a daily time frame. You see my pointer here. This is a daily chart on the S&P futures, and here's the 5 period exponential crossing the 13 period here. So this would be 5 days crossing the 13 day, and you can see how then price accelerated down. Then you got the additional cross here of the 8 crossing the 21 and had a big acceleration. So we're coming right back in. This is middle of June 5th as this is being done, and you can see we're starting to get a little bit of a shift up, but we're not getting that confirmation quite yet. Now using this as a indicator for signaling a crossover reversal is also really good for the commodities, so it really works well pretty much on anything that you want to look at. So here's a chart of a daily chart on crude oil on the right, and then a weekly chart of crude oil here on the left. So if you look here, my crosshairs, you'll see that on the daily, you'll see that on crude oil back in October of 2018, we see the moving average crosses. You've got the 5 period crossing the 13, the green crossing the white, and then you've got the red here crossing the 21, and this accelerated that momentum from that reversal, that crossover. And then you can see the chart to the left here. You can see when that weekly cross, then it really just broke it down to the hard side, to the downside. So then you can just follow along, and you can see then when did this reverse back up to the upside. So look at this massive trend down on crude oil, and just nailed it pretty much all the way down, and then did not get a crossover reversal until right here back in January of 2019. So you can see here then the weekly crossed over back in February of 2019. So it's a really great trend indicator for reversals, and pretty much anything you want to look at it works great. Here's one more example. Here's Apple. So here's the weekly and here's the daily. So this was back when Apple had that big move down in 2018. So you can see the weekly cross here, see the cross of the moving average, the 15 crossing the 5 crossing the 13, and then the acceleration once the 8 crossed the 21. That's on the weekly, and then you can see the daily went ahead of that. So here's the daily crossovers, and then never crossed back up, and then we finally got a move back to the upside. Once you had that reversal here, you can see the crossovers back here back in January of 2019, and then had that big acceleration to the upside. And currently moving into this year of 2019, you can see the crossover right here. This came back in May of 2019. See the crossover there, and then the crossover on the weekly. So very accelerated downtrend. Now that's moving averages. Now that's just part of the system I use, but then I add additional momentum indicators, and I'll show you give you a quick review of that. And then you see the ultimate kind of total, package where you get a systematic directional trading indicator, our system that's very visual to give you a clear picture for tracking price direction and trend reversal. So I'm going to put in my total system with these moving averages so you can see the difference. So now I put in my directional trading model that I also use, and I incorporate this model with the moving averages. But here, this again is on the S&P futures. This is the weekly chart. So you can see these arrows. These are reversals. So these are what we call cycle reversal. And what this does is it gives me a heads up. It gives me a signal way ahead of time as to the market maybe turning over. So we knew in advance. Here, this signal was January of 2018. We had a reversal, so we were looking for this market to push down lower, and then we got that confirmation, and so you got into this way ahead of time before the market said collapse. And here you can see on the weekly that it finally turned over here. You can see our momentum indicators below showing this very, very negative momentum, and see how the market's pushed down. So then we had another reversal right here. This was back in September 2018, and then finally confirmation on the moving average cross back here in October. So this has given us a heads up signal 1 or 2 months in 1 or 2 weeks in advance, and then you get the big sell off, and then here's a reversal back to the upside. Got an advance warning there, and then you get the crossover, and then we're currently right here with another reversal right there, and then here we are currently. So this is the dynamic system that I put together that incorporates the moving average indicators, but then also adds other cycle reversal indicators and momentum. We use momentum to give us price direction. So I hope you enjoyed this review of a great indicator, the moving averages. And if you'd like to learn more about this type of trading, make sure to use the link below. So just use the link below and come join us at powercycletrading.com, and thank you for your time.